Hello and welcome to Scrolling with Ceazor. Today is February 4th, 2026. I got a lot of tweets for you today, and as usual, this is not financial advice. This is all just my biased opinions and thoughts based on the news that has come to me today. Okay, so let's get right into it. So today I'm going to take a quick look at these charts here. I'm not, again, this is not financial advice. This is just kind of what I'm thinking, basically looking at these specific little positions, okay? Now, these are not my entire portfolio, of course. They're not even a significant amount. It's just something that I care to share and kind of give you some ideas while I think about what's going on with here. So I've done a video on this in the past that kind of explains a little bit deeper, but here we have there's actually three positions here. So we have a Uniswap concentrated liquidity position. This thing's been out of range now for 4 days, and it's sitting all in, this one's actually sitting in Coinbase ETH. So it's at least earning, liquid staking yield, APR, right? So I'm considering moving it, especially since it's sitting in Coinbase ETH, to something that's a little less Coinbase, a different LST, right? Anyhow, so it's sitting on a range, and I'm kind of thinking about it, like, should I move this? Should I trade out of this? Should I just sit in ETH? I'm going to sit in ETH for a little bit longer because, this is kind of, I don't know, like it is falling off a cliff. I'm not trying to catch a knife, but I am already holding the knife. So it's like, what should I do? I'm not sure, right? So over here we have two carbon positions. Here we have a reoccurring order. So this was like buy low, and this is sell high up here. And as you can see, it never really went into my sell high. And I actually, before, I had the buy low a little bit lower, and I had moved it up because I thought I moved it up when we bounced off this line here, and I thought we were going to come down and maybe bounce around through this a little bit. I was obviously clearly wrong, and this is a low ball reoccurring order. Now these positions are all in SUSD, WST ETH, so on Carbon DeFi. So I was like, this is my low ball, and it got tipped, it got touched and filled, and now it's sitting all in WST ETH. It doesn't have an actual sell order, so I don't know. I'm gonna have to decide where I want to sell the ETH that I accumulated here, somewhere up above. I'll think about that later as it starts going up and stuff like that. But I do want to try to plan this out a little bit and kind of think of what I want to do. But it's been, the Uniswap position's been out of range for 4 days. So it's kind of getting around to the time where I should try to start thinking about whether or not I want to make some changes to this position or not. And that's kind of what I'm thinking about this. Now the market is, it's a little bit scary. Like, this is ETH. This is pretty much ETH's price. This is obviously a chart. This is, WST ETH versus SUSD. So the prices aren't going to match up with the actual prices of ETH. ETH's price right now is about 2,150. So as you can see, the prices don't match up, but the chart shape is exactly the same, right? But then if we move over to gold, let's first look at WBTC, right? WBTC again is, it's pretty rough, right? Anyhow, but gold has recovered some of its losses in the past couple of days. Now it's not completely back to all-time high, and will it ever go back to all-time high? I'm not sure, but clearly people are okay with gold and precious metals, getting back into it, buying the dip, so to speak, and I'm hoping it'll grab around in here for a long time. But getting interest-bearing gold is pretty hard. But at least I'm trading here. This is interest-bearing gold. This is gold versus interest-bearing stablecoins. So anytime it does go up, any of the stablecoins I'm holding are interest-bearing and increasing in value. So anyway, so that's kind of what I'm thinking about with the charts right now. I'm not going to make any changes today, but anyhow, I'm kind of thinking about it, and it's kind of coming into my mind. Okay, so let's swing over to tweets. I got a lot of tweets for you today, so let's get right into them. Okay, so first we have Milk Road. Milk Road has, I haven't listened to this entire thing. Like, it's only like 30 seconds, but basically, she's calling out Binance, saying Binance caused the 1010 crash. And there's a lot of data and a lot of accusations against Binance causing that 2020 crash. And I did see a chart that says basically the opposite, that shows like the crash happened slightly before the whole like USDE stuff happened on Binance. It's pretty hard to say which one is whether or not we know for sure whether or not Binance was the actual culprit. But one thing I can say is that like obviously like DeFi is permissionless, it is open source, it is like transparent, and Binance is a black box where they can do almost anything without telling people what's going on. Of course, there's a lot of people who investigate like correlations and causations and different kinds of like, oh, look, this happened right after this happened, and so forth. But if we just stop using them, then we'll be in much better shape. Like, I don't understand why people are still putting like hundreds of millions of dollars into Binance. Like, do they feel safer in Binance than they do in Uniswap or a Hyperliquid or whatever they're trying to do there? I think it's mostly a fact of like big money institutional investors or just rich people who have no idea really what's going on, and they've just put their money into Binance's hands and said, you take care of this. And then like the most recent accusation I heard was that like, the whales of Binance were like, hey, you need to make us some money. We're not making enough money. So then Binance is like, okay, I'll figure out something. And they caused the 1010 crash and liquidate a bunch of people and get a bunch of money for those investors. I don't know. The accusations are pretty wild, but at the same time, like, we can avoid it just by moving over a majority of those funds to DeFi. But anyways, you can check out this video here where she calls out Binance and says Binance is the culprit. Anyhow, let's moving on. So here we have an article by Evan SS6. It's pretty good. I've read through it. There's not a whole lot of new information in here, but it's always good to read this stuff, and it kind of refresh your memory and kind of like bring your thoughts back in line with the way you should be thinking. Okay, so I'll just read through the headings, and then you can read through the paragraphs at your leisure if you want to. So the first one is, being a good trader or investor often calls for fading your own human nature. So yeah, like, get out of like, don't use your emotions and your instincts as much as, try to get into a logical based thing. Investing and trading should always be unemotional. So again, that kind of talks about that a little bit. The best hedge is to sell the position or put buys against it, and the best long is the most indirect thesis. So he's like, basically, try to hedge your positions properly so you don't overexpose yourself. Now, I kind of think hedging is not completely necessary if you're using like just spot. If you are leverage trading, then you might want to hedge a portion of your position so you don't lose it. But if you completely hedge your position, then you're going to get no upside, but you get no downside, and you just kind of farm the basis trade, just kind of farming the funding rates and stuff like that. And I find it's easier to just farm APR in DeFi than to try to do the basis trade, because you don't need to monitor your hedging then, that you're hedged correctly. But that's just me. I'm not saying that the basis trade's a bad one. I hold a staked Athena USDE, so I'm okay with it. But yeah, so what he's talking about, I think, is more like, if you're gonna, let's say you want to do like a 20x long on ETH, you probably might want to do like a 10x short on ETH as well, to try to hedge that possible risk that you might lose. You know what I mean? Maybe that's what he's getting at. I'm not a big fan. Like, maybe like he's talking about Pepe and stuff. So anyhow, let's move on. So the next one is, don't be afraid to pivot on a dime. Yeah, that's pretty straightforward, right? Like, don't marry your bags, as they say, right? if you have a good eye, don't worry about macro. So I think he's more talking about like launching a product. Like it doesn't really matter if your product's really good, like you can launch it, and you might even like have a little mini cycle because your product is so good. That said, if your product is like a fork of other things with very little uniqueness, then you really have to like deploy during like bull runs where people are like looking for like extra juice on new APR farms to farm and stuff like that. I've deployed some games, little crypto games that were like extremely PvP kind of stuff. And I deployed them during like a bull run, a little mini bull run, and they were pretty successful. They got users. And then I did a version 2 of it because the community asked me, you know, let's do version 2, let's do version 2. So I deployed a version 2 when the macro was the opposite. It was not frothy and happy, and almost no investors. We had to refund the investors that came in. So there is the idea, you know, like you do kind of have to think a little bit about it, but he's kind of just saying it. Don't worry too much about it. Okay. Preparation allows your gut feel and muscle memory to operation unabated. So this is a really important part of crypto, I think. This is why I do this kind of like why I'm doing these set orders. Like if ETH were to pump out the top of this like 6,000 range here, I would be all in stable coins and I would have taken my profit. You know, I'd be out of this ETH. I would not re-enter. I would not move this line around. So I make my decisions and I stick to them. So I'm not gonna, like, this is not, again, $6,000 because it's WST versus interest-bearing stablecoins, but you get the idea. Like I set these markers for a specific amount, and then I leave it, and I don't try to make a lot of changes to it. Okay, and then we have the next one is there's always another trade, and you can always catch it if it stays if you stay in the game. Yeah, so like, you know, if you make a bad trade, as long as you're not, you know, as long as you don't blow up your entire portfolio like doing some crazy crap on like, you know, a purpose exchange, right? As long as you don't blow up your entire portfolio, you can always just make another trade. So don't really dwell on the losses as much as trying to get it. You know, just try to, you know, keep looking and keep working it, right? And then we have number 8, pay yourself. Of course, again, take profit. And he's actually saying, you know, take profit out and buy real world stuff. Like, so buy a house, a condo, pay off your car, you know, give your parents some money, go on a little vacation, you know, buy that TV that you want, or, you know, like, don't just fold everything right back into like shit coins, right? If you make some money in that sense. Okay, so and then the number 9 is this time is never different. Okay, let me read what he says here first. This is a seduction in every bull run to believe we have entered a new paradigm. You will hear the valuations don't matter anymore, that the old rules are dead, and that this time is different. AI, robotics, space, generational opportunities. I have zero doubt that, but it is never different. Okay, so yeah, like, people are greedy. It's all about making money for the most part. You know, there are some, you know, people in it for the tech, but the vast majority of capital in the space is in it for the money. They're looking to take your money, basically. So it's never going to be different. It's always going to be that. Now, it might be different in the case that, oh, this time the grift or the game is, you know, I don't know, again, AI coins or meme coins or NFTs or you know, crazy APR yield farms or whatever the heck that new thing is going to be. The meta might change, but the underlying ideal is everybody wants to take other people's money. You can do it in a altruistic way, in the sense of like build something that actually matters and helps people, or you can do it in a super grift way where you just like rug pull LPs, right? So that's kind of, you think about it that way. Okay, let's move on. So here we have my good friend Simon Didek. He comes up on my feed a lot, and almost every day I read something he says, and I'm like, yeah, that's good. Okay, so Here we have the Kobayashi letter talking. He says Bitcoin falls below 7,500 and ETH falls below 2,200 as crypto sell-off accelerates. So it just showing two charts. This is what happened, and it's, I don't know. Like I think anyone who's following the Kobayashi letter knows this already. So it's not really news, but anyways. So Simon replies to this. He says, imagine selling when the PMI's hitting new highs. In hindsight, it will be obvious. Now, I'm not saying, that Simon's right, that this is the bottom and things are going to start pumping again. But, like if you look at my position, I haven't made any changes, and I'm definitely not selling more down here. I'm not just, I'm going to sell more ETH. I'm definitely not going to sell the ETH that I just bought up here and here, down here. I'm not going to do that. That's for sure. So I kind of agree with him in some ways. You kind of have to find a reason to believe in your positions, and you kind of have to be patient and wait it out. Like it might continue to go down, but that's why I love buying interest-bearing ETH instead of ETH. That's what make ETH so powerful. There's so many LSTs you can decide and choose from and get 2-3% on them. Why would you sell something that's earning you 2 or 3% that is not, it's not going to zero? I'm sorry, but Bitcoin and ETH are not going to zero. I highly doubt that. I could be wrong. Maybe, I don't know. I don't know. Maybe I don't know. There is possibility in the world. It's not a zero chance, but the likelihood is very low, right? So, anyways, let's keep moving on. Paper Imperium. Paper Imperium is a person who likes to talk bad about MakerDAO or Sky ecosystem a lot, but what he says is truthful. His everything I see him post about is always about MakerDAO or Sky, whatever you want to call them, how they're kind of manipulating the narrative around them and kind of doing stuff that's kind of suspicious or not subpar, sub ideal, right? And but when you read through his stuff, it makes sense. It's logical. It's kind of, you can kind of call it FUD, but it's truthful. So there are people on Twitter who FUD things shamelessly. They lie. They make up crap, and they just FUDding other people's stuff to try to get attention towards their own bags, right? Whereas I don't see Paper doing this. He's kind of calling things out, and I believe he's a valuable person to follow, especially if you are somewhere in this ecosystem. So I want to kind of read a little bit of what he said here. So Matt Crezier, I don't actually know who this is. He's saying stuff about Spark is the second. He says blue chip. Where is it? He's the second best in TVL under Morpho. And all these other ones. Now, I don't know why Aave is not on here, but anyways, so is a leading institutional grade blue chip money market protocol in DeFi, beating out Aave's V3 prime market instance in market size. Okay, so he's kind of just showing TVL numbers, and TVL numbers are not really useful, right? They do matter. We do have to care about TVL numbers. They're not pointless, but they're not the best metrics to kind of measure the success of a protocol. So let's kind of look what Paper says about Spark, okay? He says Sparkland doesn't make money, only $250K in the platform. What makes money is Spark borrowing 4.3 at Maker and investing it elsewhere. So Spark is borrowing from Sky, right? And then taking that DAI or the SUSD elsewhere and farming it, right? That's how they make the most of their money. That's what he's saying here. Where's the other part I wanted to read? It says it's hard to make an investment case for Spark because, like many protocols, the token Spark doesn't really do much or have much in the way of legal or technical rights. So the token is semi-pointless, right? So you wouldn't want to buy the token. That's kind of what he's saying. And if you're going to deposit, basically you just want to deposit where you're going to get the best risk-adjusted APY. So I'm not sure if Sparkland is that. I haven't deposited into Sparkland, not because I think it's dangerous or terrible, just because it hasn't come across my radar when I'm looking for stablecoins to deploy places. But anyways, you can check out Paper Imperium. He's trying to. I'm not gonna say so much as he's calling bullshit for bullshit, like, because I don't know. I didn't read through Mark Kreischer's entire statement, but he's pretty good at calling out the Maker Sky ecosystem for stuff that's happening there that's a little bit suspicious. Okay, so you can check out him and check out those and check out this tweet and kind of go on. But let's move on. So here we have Lex Node. I got 2 tweets from him today. I'm so happy I started following him again. I don't know why I blocked him. He must have shilled some coin in the past. But anyways, so here he's got one that says, why are the markets not rallying at the news that the SEC dropped its enforcement action against American Crypto Fed DAO LLC, the Wyoming DAO LLC that tried to register its tokens as securities while claiming they were not securities? And then someone says, because nobody big was positioned for it, and the headline screams niche edge case, not green light for the whole sector. I don't know too much about this, and I definitely don't know. I definitely haven't read this enforcement action against these people. But he does make an interesting point. Nobody big was positioned. So if that had it might just be a case of American Crypto Fed DAO is just a small little niche group of people that, were trying to get success and kind of now maybe they're just fading it. And that kind of happens a lot in crypto. It's really hard to find or to predict which team is going to be that huge team and which one's going to have success. And now if this had, Coinbase on it, then it would definitely be all over Twitter. Okay, so anyways, you can check out this if you're interested in this, and let's move on to his other tweet. Okay, so here he is replying to me. Now the original post was deleted. I don't know. I don't remember what this was. So it's basically somebody calling out Vitalik for saying the L2s are pointless, blah, 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 right? And that's kind of the news of today. And I've got a whole bunch of tweets. The next maybe 4 tweets are all about this. But I want to talk about my thoughts first and then his reply to me. And then we'll go through these other tweets. So someone had said something about it blah, 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 blah. And then I said, I look at this. I look at his post as more of a call to action. Now, Vitalik's not the best at writing, and he's also probably doesn't consider the repercussions very much of his statements. He just kind of has thoughts, articulates them in his inaccessible manner, right? And then just puts them out there. These are my thoughts. Do with them as you please, right? And I kind of sometimes try to think about the possibilities. I try to put silver linings on some of the things he says. Like in this case, I said, L2s have been kind of coasting along for a while now. Few even seem to care about obtaining level 2. Level 2 is if you go to L2 beat, that completely escape hatch completely easy, right? And interoperability, they're not really trying to become interoperable. Superchain from Optimism has done quite a bit. But they didn't coordinate with Arbitrum and kind of create an interoperability between those L2s, and especially the L1. There's no it's still bridging everything, right? And I am an outsider and actually waiting for the tweets to say they got there. So I'm not really. What I mean there is that I'm not in the groups with these L2 developers, seeing them trying to coordinate this stuff, I'm waiting for the news to say it's done. So that's, my statement has very little salt to it because I'm not in those groups. But I don't see people talking about, oh, we're making these steps, we have this roadmap, we have this, blah, blah, blah. We're working towards, achieving interoperability, or, base next month is going to be an L2, level 2 L2. You know what I mean? So anyways, so he says, I agree. So then Gabriel replies to me, I agree. There will continue to be L2s. Makes a lot of sense. And then I do say, like, they only seem to care about transaction count versus blob count. I don't think L2s are obsolete. Even if the L1 can scale to crazy high throughput, there will always be a use our chain. It's only one hop away from our sexy experience. So like Coinbase is not seeming to go anywhere, and they will always encourage people to go to Base. Now, whether or not Base will continue to be an L2, that's a question that we can all ask, right? And then he does kind of say that. He says, I guess Base, Arbitrum, Optimism are no longer roll-ups by this time next year. And I guess Robinhood never launches a roll-up. So that's kind of a scary thought as well. That, like, if all of I really like the L2 roadmap, or the L2 system, where like all these L2s can kind of like roll down onto Ethereum, settle on Ethereum, but they can have their own user experience, their own individual parameters and changes and stuff like that. So I'm a big fan of the L2s, but what Vitalik said kind of makes people think no. So there's a lot of tweets about this. So let's kind of go through a few other people's thoughts on this. So Hayden talks about it. He says the main problem with framing them as parasitic, L2's parasitic, is they're doing a lot of the hard, expensive engineering work to scale Ethereum. So this is basically the opposite of what I said, right? He's saying, no, the L2s are doing a lot of work to try to scale and make Ethereum as a whole better. So that's pretty good. Like that's nice for me. And this is intentionally outsourced to them under the roll-up centric roadmap. If Ethereum wants to stand on its own, it needs to take a serious engineering-driven approach versus thinking of every problem like Research One. Okay, so he's like saying, like, business is business, and if Ethereum doesn't want to be a business, then they need to allow the businesses to do business. If that's kind of makes sense, like. So it's nice to see that he's saying that, like, they're doing a lot of that expensive engineering work to help make Ethereum better, and then we can continue to allow Ethereum to be slow, safe, and research driven. So anyways, that I think Hayden's got some good points here. Okay, moving on, we have Sam from Rise. Now he is building an L2 right now, so he definitely has biases in a sense. So he says apparently it's ratioed gold fed season on any other takers. So Bread is talking to gold fed about like these L2s, this L2 problem. I don't have this thread actually. And then Mert comes in and tweets about like Ethereum he's like, isn't this you? He's acknowledging mistakes is good, rewriting history is not. So Arbitrum is Ethereum. He's just basically saying, you know what, like you said and then here it says Arbitrum is not Ethereum. So like, make up your mind, right? But at the same time, like, things change. So maybe this gold feddler is I should probably follow this. I am following this guy. Anyhow, so Gold Feddler is maybe obviously he's biased for Ethereum. Like if we click on him, like hover over him, he's the co-founder of Off-Chain Labs, contributed to Arbitrum, and so forth. So I don't know. Like I don't know if L2s are gonna die, but it's kind of like there's two things there. One is it's kind of like I said, like maybe Vitalik is just trying to like push them a little bit to try to become a full like level 2 rollups, like take those extra little steps to get that interoperability up. Maybe he's actually believes that L2s are pointless. I don't know, but it's definitely now news. Everyone's talking about Ethereum right now, and people are selling, and maybe people are buying. I don't know. Like, I still have a long-term belief in Ethereum, and I kind of disagree with him that to say that L2s are pointless. I definitely don't think they're pointless. Okay, and then we have rip.eth. So he says, without L2s, Ethereum is just another blockchain. With L2s, Ethereum is the new internet. Now that's a little bit cryptic and stuff, but if you kind of think of it in that terms, like it's kind of true. Like if we just take Ethereum and just isolate it down, then it's just competing with all these other L1s, and it becomes competing with Base. But if we just kind of consider it with the L2-centric roadmap, then all these little businesses can open up. They can all have their own users, their own communities, and they kind of all just settle into Ethereum, and Ethereum kind of is just that common denominator between all these things. And I do agree that like it should remain that way. I don't know. I can't read Vitalik's mind. I've never had a DM with him. Obviously, I can't message him and he will answer me. So I don't know. Those are my thoughts. I just kind of feel sometimes that like his timing is just terrible, even though he has well thought out things and he thinks a lot about them and it makes sense. It's logical. It's just timing is always terrible, right? Moving on. So here we have Legion says ICOs are dead. He's quoting this Narloff. Narloff says, I don't get why people call something dead just because it was abused. ICOs are dead. NFTs are dead. Blah, blah, blah are dead, right? It's just the way Twitter works. Like, obviously, Legion doesn't want ICOs to be dead because that's their entire product, right? Selling ICOs. Now, are ICOs dead? No, but I don't think you can kind of think of yourself as an ICO trader. I don't think that's a healthy thing to do for yourself as well as the industry as a whole. I believe that people should be buying ICOs with staked vesting tokens. So you should only be buying an ICO, in my opinion, if that ICO's token has a designated utility to start. And it should, but at this point, if it doesn't have revenue share, then don't even go near it. Like it's a waste of time, in my opinion. Okay. Now, so you need to, if you're going to participate in an ICO, in my opinion, you should look at it and be like, does this have rev share and utility, right? If it does, then I might participate in it. And then all of these ICOs should be just immediately vesting but staked. So you're getting the rev share, you're getting that, but you cannot sell. So you get in early and you actually invest in the company. That's what I think ICOs are for. But what people think of ICOs for and what the space thinks of ICOs for is alpha being early so you can dump on the people who buy the hype. That's what most people are doing with ICOs. That's what they're trying to do. And of course, like that's why it gets dead, because like if you just skin the sheep, they're gonna move away to a different pasture. So like people were skinned in meme coins, people were skinned in NFTs. Of course they're afraid to bring their money back to it because they got skinned, right? They got extracted. So I believe that's why people say people are just angry because they got skinned. So then they start saying blah, blah, blah are dead. And it's kind of, there's truth to it, right? And you just have to, if we just use things the way they should be used, in the sense that like we actually promote the growth of an industry, invest in things that matter, or make a change, or have a product market fit, or make logical sense, then nothing will be dead, because then people will benefit from their long-term investments. Now, the price action might not be great, but if you put $10,000 into a coin and it takes you a year to get $15,000 back, that's not too bad, right? That's not horrific, right? Even if your token goes to zero, but you get rev share back and you get back your initial capital plus a little bit, then it might be worth it, right? But people are just trying to get rich off of hype cycles and pump and dumps and stuff like that. And that's kind of why the ICOs are quote unquote dead, right? Moving on. Here we have Peter Steinberger. Okay, so he says, I don't know exactly what happened. I'll have to dig a little bit deeper, but I can talk on what something he says here. He says, and people wonder why I don't support crypto. Got so much love from that community. Lobster from the base. Could be really cool band though. So I don't know, like, let's click into what he's got some email to him. And it says this: all cryptocurrency investors lost money because you changed your name. Screw you, you idiot. I sold at a loss, you moron. You lobster from the base. Now, I don't really know what happened here, but I do have some thoughts on this, okay? And that is, like, there are people who open up these DAOs, protocols, meme coins, whatever this possible type thing is, and they are now the face of that, but they don't consider themselves the face of that, and they make decisions for personal reasons that affect all of those investors. And that's what the writer is trying to get at. Like, you have great power, and therefore you have great responsibility. You can't just do things willy-nilly because people's money is on the line. That's what he's trying to say. And, like, there are many people in the space that are in these positions where they have great power to influence the markets with their actions, and they should acknowledge that. However, on the other hand, I don't know what this guy's connection was and what he was connected to. I just simply don't know. But on the other hand, you make a bet, you make a buy, and if your investment thesis is based purely on this guy's name, and his name changing has this big of an effect on your investment, then maybe you're making investments for the wrong reason. Possibly. I don't know exactly what happened here, but like he's got Lobster on it, so it has to have something to do with Lobster DAO. But I don't know what token he's talking about and what community and stuff like that. We can kind of read through the tweets here, the replies, and kind of see what. Let's kind of read what Scoopy says, because Scoopy tends to have some insight into these kinds of things that align with what I'm saying. So it says, for what it's worth, the mass majority in crypto hates that small but extremely annoying and scammy segment of the wider crypto community and have complained for years. But they just find faster and newer ways to destroy value. OpenClaw is awesome, by the way. Thank you for the gift to humanity. I'll have to look at what OpenClaw is. Maybe, yeah, oh, here it is right here. Let's check. OpenClaw is an AI that does things: emails, calendar, home automation from your favorite chat app, your machine, your rules, new shell, same Lobster soul. So I guess it's pretty clear what it is. So he probably had OpenClaw in his name and he removed it. And then everybody's like, oh, the founder's leaving. And they sold their bags and dumped the coin because they were buying this coin because this popular guy said he was the founder, and they were all just trying to trade the hype, right? Instead of, buying the coin because the coin allows them to use the AI at a discount or something like this. I don't know the point of the coin, but anyhow, think about that. Especially when you're buying stuff, dig a little bit deeper. I'm going to follow these two people, just add them to my list here. Now let's move on. Here we have Curve Finance showing the peg testing of the CRV USD stablecoin. And the chart looks terrible. If you can't see it, it's like a bunch of red candles, a huge giant red candle, and then these are 30-minute candles, and then immediate green, back to almost back to $1, but just below peg, like where stablecoins usually sit, right? So there's a big testing, and I thought about this a lot, and I do, and it's actually a retweet of Jordy of Cryptoland, and he's like talking about like he's got similar charts a little bit closer in, and showing that this peg as well, and he's like, oh look, CRV had a massive stress test. Let's open up Jordy's and see if he's got any insights. I didn't read his, I'm sorry, but I do have some thoughts on this. I'm just quickly going to scan through it. Yeah, so he does call out its yield basis and their system about testing the peg. So basically, if you think about it this way, okay, so anytime there is a liquidity pool. In this case, we've got liquidity pools of WBTC, TBTC, ETH, and a whole bunch of other liquidity pools versus CRV USD, right? And these are volatile assets versus a stable coin. Now, when these volatile assets start to dump like crazy, which BTC dumped like crazy, as well as ETH, it's down. So what happens is the arbitrage bots come in and they start arbing these prices. They start, pulling this value, paying the trading fees, but arbing those assets so they are, at the same price as the general market or roughly very close to, right? But these arbitrage bots don't want to sit in CRV USD, so they take all that CRV USD that they're getting, because you think the price of WBTC is higher on the WBTC CRV USD pool than it is on the USDC pool. So they sell WBTC for CRV USD, but they don't want CRV USD because they're arbitrage bots. They want to sit in, USDC or USDT or whatever, and then they sell this CRV for USDC, and then they sit back at that. So they've arbed the pool, and they back into USDC, and the CRV as a result gets tested. It gets pushed down, like boom, 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 boom. So, and these cascading like liquidations, cascading price dumps happen within like hours or minutes even sometimes. So you can see that what happened was tons of selling, but then the community sees that, or the community or the users or the arbitrage bots or the peg keepers, they see that now CRV USD is trading below peg, and they come back and they bring it back up. So this is why I really like yield basis and CRV USD, is because it's designed to take these hits, right? Like there's no like, oh, we got to call a bank. The people are not, the system is very automated. It's run by keepers, and it kind of, they can defend this peg. Now, if this was, a $700 million depegging, that's a different story, right? But as you can see, it was able to handle the cascading drops of BTC and and ETH so far, right? So anyway, so you can kind of check that out. I like these protocols. I've got a video on lots of this stuff, so you can go through my channel and find out. So anyhow, there we go. Moving on. Here we have, I got maybe 4 or 5 more tweets for you. I think I'm kind of going a little bit long today, but anyhow, let's get it done. So here we have Ceazor. Ceazor is like moving from Binance to Ceazor. Learn how to get started if you bought a Ceazor hardware wallet and ready to get your crypto off Binance so you can hodl safely. Follow this step-by-step guide to moving your crypto. I think this is great. I think a lot of people need to kind of consider, like, you know me, I think people should not be holding vast amounts of their net worth on Binance. They should be holding it on self-custody. But, there's almost nothing better than a hardware wallet to help you be a little to increase your safety for your hodl. Okay. So, anyways, like the one person says it's a great move if you want to get kidnapped, and he's right in some ways. Like, if you start telling everybody that you've got millions and millions of dollars in your Ceazor, and you're going to the bars, and you're tweeting your face out, and you're doing, you've got a podcast, and you're like showing people where you live, and you've got all this money in crypto and it's all in your Ceazor, then yeah, you're more likely to get kidnapped. Definitely, right? But if you just keep your head down and don't gloat and don't try to show everybody all your money, then you're less likely to get kidnapped. Okay, moving on. So we've got Liquidity. So Liquidity there's a article here on from Bankless. So Bankless is starting to talk about trustless stablecoins are back in the spotlight. So we've got Liquidity, we've got Polaris. I started looking at this a little bit. I haven't looked at it deeply yet. I haven't read the docs, and there is no documentation yet. So it's just kind of a concept. And there's one more in here. So Liquidity, Money Leak, and Polaris. So you can read through this article. I'll kind of link to it in you can kind of see what they're talking about. It's not a very long article. It's very short. It's just kind of an introduction to these different kinds of like stable coins that are just backed by ETH, no treasury bills, no real world assets, just kind of but as I mentioned before in the past, just you can also check out that trustless force that they basically is maybe Polaris and this other one. I've forgotten what it was. Money Leak. Maybe they can join the trustless force, because that's the whole point of the trustless force is to promote the use of trustless stablecoins. Okay. Moving on. FX protocol. FX protocol says payments need rails, AI agents need liquidity. We just launched a new pool on Hydra FX, HydraFi, FX USD versus BANKER. You can check it out. I've never used Hydrex, but it's a base frictionless liquidity hub. So I'll check it a little bit more. Maybe I'll just open it up and see what it looks like. And you can bridge. I'm a big fan now of this FX USD. I especially since I started looking at it recently. I think it's pretty interesting. So yeah, Hydrex. It looks like a liquidity pools. I don't know too much about it, but I'll have to dig a little bit deeper and find out more. But you can check out this opportunity. Let's see if there's any APR. It doesn't show even APR, but maybe I've got to connect and stuff. I'm not going to connect live on my podcast here. I'm going to go in the way I do things carefully and take a look. Okay, so next thing, I've got two more tweets here for you. Trading tulips is like insane algo, and it's one of the things I kind of hate about crypto is like the algorithm's it really likes to feed you like toxicity, and instead of like positivity, it's really biased on that, like trigger tweets. It just feeds so much. So anyway, he's just sharing two tweets, which is funny. It's basically this congressman saying that Donald Trump raped children, threatened to kill children, thousands of allegations of him doing this kind of stuff in the Epstein files. And then the very next tweet in his algo is, Trump, it's time to turn the page on the Epstein scandal. So yeah, he's just like, this is what I'm getting fed in his feed. Like Trump's a pedophile, and then Trump saying, let's move on. Okay, so that's kind of, anyhow, let's move on. The last one here we have is Sonic the Hedgehog. I don't know who this person is, but I did see this a lot. It's like there's all these like tweets now of people pretending that they are recipients of emails from Jeffrey Epstein. This is the new meme. I can just imagine what it's like on Pump Fun and how many like Epstein coins there are and Epstein related coins. I can just imagine. So basically it's like, hi Jeff, I'm going to launch a dog coin on AVAX Snowdog. Make sure you sell before November 26th. So take care, Sat. So yeah, so I guess Sat launched a meme coin on AVAX called Snowdog, and in November 26th it dumped like crazy, I guess. And it's just you'll see this a lot if you start scrolling today. Everyone is kind of doing this like Jeffrey Epstein recipient email meme type things. Okay, so anyways, I guess that's it for today. Thank you for listening. I hope this has been entertaining and useful, and goodbye.